welcome to RANsquawk's e-morning briefing for Monday the 16th of November 2009. Just taking a quick recap in terms of the overnight news stories before we head into where we stand at the moment in the European markets. Starting with Asia, sentiment very much kicked off with the annualised GDP for the third quarter, the prelim number in Japan, coming in double the consensus. The print there on a year-on-year basis at 4.8% in Japanese growth in Q3. That's against an expected 2.9%. The previous 2.3% was also revised higher to 2.7%. Japanese economy grew its fastest pace in more than 2 years in Q3 as stimulus lifted consumer spending and capital spending rose. But analysts did say that growth will slow as falling wages reduced the allure of subsidies on cars and electronics. Overall, or elsewhere in other news flow, it's been very much dominated in terms of currency news, and that's the visit of President Barack Obama into China in Beijing. US President Barack Obama said that Washington was not trying to contain China's rise, but said that trade between the two giants needed to be more balanced. We did see an article in this morning's London FT which said that China, saying that Fed policy threatens a global recovery. The Fed is fueling speculative investments and endangering global recovery through loose monetary policy, according to a senior Chinese official who warned on Sunday just before President Barack Obama's arrival in China. He's still speaking and will be throughout the next few days, so we keep an eye on his comments, particularly in regards to trade relations and that of the US dollar and Chinese yuan and potential appreciation. Elsewhere, Fed comments from the weekend. Honig said that there is still significant weakness to work through in the US economy, and Fed's Dudley said the central bank could curtail the risk of future liquidity crisis by providing a backstop to solvent firms with sufficient collateral. Some comments as well from Fed's Evans, who sees highly accommodative policy for quite some time, but is confident the Fed could shift to more restrictive policy when the right time comes. Also, one article in regards to the US TARP program that's being covered in the FT, which could get more attention when the US come into the market, as Europe hasn't really paid too much of attention. The Obama administration ponders a TARP extension, writes the Financial Times, with the administration leaning towards extending the troubled asset relief program into next year, retaining part of the $700 billion war chest in case of another financial emergency. Elsewhere, just take a look in terms of commodities. We did see some quite hefty dollar sales in towards Obama's first speech in China. Again, looking for reassurances in terms of the role of the dollar and also any commentary in terms of the Chinese yuan in particular. On that note, a stronger yuan is part of the reforms that Beijing needs to implement to increase domestic consumption and help ease global imbalances. That was according to the head of the IMF. Where China should keep the yuan stable in part because that is beneficial for the global economic recovery, according to the Chinese Commerce Ministry. Overall, though, we have seen a weaker dollar, and that in turn has aided the commodity markets, in particular spot gold, which alongside the weaker dollar has also been boosted by comments out of the investment fund BlackRock, who said this morning that central banks will be net buyers of gold this year as they diversify away from the dollar. That as well, alongside the FT article stating that gold mining companies, the largest in the world, they've warned that global production of the precious metal is likely to resume a long-term decline in coming years. So fresh record highs in spot gold up 1% at the moment, currently around $1,130 last. Elsewhere as well, that dollar weakness has also buoyed the energy complex, with WTI crude futures as well trading a dollar higher on the session, up at around $77.30 last. In turn then, reflection into the equity markets, we're up around 0.75% to 1% in the FTSE CAC index, with basic materials outperforming the other sectors around 3 to 1. So the likes of the FTSE seeing some minor outperformance given the heavy dominated basic material weighting within the index. Taking a look in a couple of equity-specific stories, starting off with the US, a couple of Barron's articles which will get attention when the US comes in. Barron's a very closely followed newspaper. ExxonMobil, their shares may rise more than 20% to $90 next year if energy prices increase as expected. And elsewhere, FedEx shares, which have more than doubled since the low in March, they may climb further given the delivery company's growing exposure to overseas markets such as China. Elsewhere, noting for some of the government-owned state banks in the UK, RBS and Lloyds, they're seen marginally lower, currently underperforming some of their banking peers. Some negative commentary from the Observer for RBS, who said that part nationalised bank is under attack after unions and MPs slammed a £630 million loan to Kraft, claiming the bank is not acting in the best interest of the UK economy. Separate to that as well, developments at unnamed city bankers have claimed that RBS is buying loans held by foreign banks in order to meet government lending targets. Again, they're down around 1%. Separate for Lloyds Banking Group, they're having to take another hit in regards to Admiral Tabbins, the pub group going under, all part of the merger of HBOS. That's weighing on Lloyds shares. Elsewhere, EADS, they had an earnings report this morning. Did come in and had Q3 EBIT of €201 million. Analysts were anticipating 281 million. Full financial consequences of the A400M delay not yet known, and they're not in a position to give 2009 EBIT guidance. However, not quite as bad as some had feared, and their shares are in minor positive territory. Take a look then ahead for today's calendar. All the Eurozone data now tied up. The Eurozone CPI pretty much coming in line with expectations. We're looking ahead to this afternoon's report. We'll get the US advanced retail sales for October, allied to the Empire Manufacturing Survey. We'll also have US business inventories at 3 o'clock. In terms of speakers, looking at Fed's Bernanke, Fisher and Conall later on today, and pre-market earnings from the US will include Lowe's companies.